Okay, so let's talk about this topic of motivation of your property buyers. Now, as we all know, or even I've encountered, when we look at properties, when we look at customers, we ask them, what is your motivation of buying? What are you buying it for? Is it for own stay or is it for investment? So own stay is quite simple, but later we will cover the topic of investment, because investment wise, it's a very long reasons or motivation or even advantages of buying. The most basic understanding of people buying a property is because mainly, regardless whether you're buying for a home, you're buying for commercial, you're buying shop lot, you're buying office, or you're buying a land, is mainly on own use or own stay. All right, if you're talking about, we're going to cover a bit on the commercial side later, but mainly for home buyers, it's either you rent or you buy it for your own stay. Yeah, so that's the main motivation of people buying, right? So the property can involve of a lot of categories, which is home, shop lot, offices, retails. It's mainly for own use, and own use is a necessity. Okay, it's a necessity under the Maslow hierarchy theory, right? Own stay is under shelter. So if you don't buy, you have to rent. If you don't rent, you have to buy, or unless you have good friends to house you for a while. And guess what? COVID-19 situation, we're all locked down in the house. Can you imagine if you don't have a house? I don't know what's going to happen. All right, so mainly own use or own stay. All right, second, under personal self, not the investment part, is pride of ownership. Pride of ownership, which means some people, they just want to own something. They want to take ownership of some properties or some assets. Yeah, some people are willing to rent, they don't mind, but if they want to, some people, they just want to own. Yeah, and for the middle to upper class people, they want to take pride of ownership in good locations. For example, where KLCC, they can just buy without any reasons. They may be staying in one side of the world, or they may be staying in part of Klang Valley, right? But when they just hear about KLCC, Bangsa, Monkera, or certain good locations, they just want to take ownership. So that is that's one part of the own stay category. Okay, now let's go to so we have covered the own stay part. Okay, and let me go to the investment part. Okay, a lot of times, if we speak to a lot of buyers or a lot of property investors, or even some new people who is thinking to invest, I can say that they are just thinking as investment, but there's a lot of reasons or even a lot of motivation why they should buy a property in any asset class. But I would say that we have to first define investment versus short-term investment. To me, investment is a long-term, middle to a long-term game, which means 5 years, 10 years, 15 years, 20 years, for the matter of fact. It's not just, you buy and then you hope tomorrow the price will increase, and then you say, okay, I want to sell it. So to me, we have to first get it right, or you guys have to really understand that for a customer to buy, when they say they want to buy for investment, do make sure that they understand what does this investment means. It's a middle to long-term investment. Yeah. So now let's go into investment part. All right. First thing about why people buy is because of leverage. Leverage means you're using other people's money. So in Malaysia, as we all know that in Malaysia, we still can get 90% margin of finance, which means that if you're buying 100k property, or even for a matter of fact of 1 million, the banks are willing to give you up to 90%. Some properties, some developers are giving up to 100% by by a certain way that I would say that it's a good news for property buyers in Malaysia. Some other countries, they are only getting 60%, 50% margin. So that's why one of the main reasons, or maybe I can share with you my experience, one main reason why I buy property is also because of I can leverage on the banks, or I can leverage on other people's money. Some people say, okay, I have 90% I can leverage from the bank, but what if the 10% I can't, I can't raise the 10%? Then follow this theory of leverage either from your parents or from your dad, but it has to be in a good reasons, like you don't leverage on them to do something else. But in terms of in Malaysia, based on my experience, I think if you want to leverage, borrow from friends, borrow from family members, if you have any cash shortage, within a good reason, you can always do that. So yes, investment 5 to 10 years or even longer. So I can see a lot of people here. Hello Linda, hello Jennifer, hello Ming Yan. Okay, let's go to number 4. Type 4, give me a 4 if you have bought a property because it's tangible, because you can see, you can touch, you can mop the floor with it or whatever not. It's because it's tangible. Why people buy properties? What's the motivation? Because it's less risky. All right. Let's say for example, when it's there, the bricks and mortar, technically it will last a generation to come. Okay, provided you maintain it properly. And the good thing about Malaysia is we have no natural disaster. We don't have earthquake, so property does last for a very, very, very long time. Yeah, so less risky than other asset class, such as shares, such as cryptocurrency. Today can be $10, tomorrow can be 15, or it can be even, you can lose almost 80% out of it. Number 5 here, I have hedge against inflation. We as a property negotiator or property consultant, we need to understand whenever people, even our buyers, they have this like, should I be worried? It's always good to remind them of the reasons. Who has bought a property here based on, because you know that the property over long term you can hedge against inflation. What do I mean by hedge against inflation is, inflation happens over time. We have inflation now, we will have inflation for the next 5 to 10 years. And do you still remember when was the last time you had your roti canai at 50 cents per piece? That day I went out and bought 2 roti canai and it costed me 3 ringgit. So 1 roti canai now is about 150. And how can we make sure that the roti canai doesn't last, the 150 per roti canai will not be 150 in the next 10 years. It could be 5 ringgit, it could be 4 ringgit. It's because of inflation, and also our currency, our value of money is depreciating every year. So what happens is, when you have properties, it tends to hedge against inflation over the long run. Yeah. For the past 10 years, if you have I bought a landed property in Cheras, it only costed me 200,000 in 2006. Now probably it's worth $500,000-$600,000, depending on the demand, buy and sell demand. When I first came back from Australia in 2003, a condo which is about 180,000, it's a lot of money already. So what I'm saying is, when you're buying a property, the reason, the motivation of why we buy properties is also to hedge against inflation. We can earn money out from our salary, from our workforce, from our business income. But if you have another asset class that can help you to hedge against inflation over the long run, that is a good buy. That is a good asset class. Yeah. So that is number 5. All right. So let's move on to number 6. Why the 6th motivation of why people buy a property. Just to let you know, the number 1, number 2, number 3, number 4, number 5, is not in any particular order. So it sometimes fourth reasons and fifth reasons will match together, and sometimes it may be a standalone motivation to buy. I just had some conversation with some of my friends these few days. They say that they buy it because of capital appreciation, and because of this COVID-19 situation, they don't see any possibility in getting capital appreciation. Now, we have to understand what kind of time frame are we looking at. We can't just take as, we have to look at 10 years, 20 years down the road. We are not looking at next month what's going to happen with property price, because as we all know, property is not as liquid as other paper assets. So we are here to remind again, sometimes to even ourselves, that in order for capital appreciation to happen, it has to happen in the middle to long term. If it happens in the short term possible, then certain things, maybe government, there will be certain things that are pushing the property up in prices, just like in 2010 to 2013, the time I would say the banks are just giving out money and everyone is buying. You ask anyone on the streets, you just throw one stone, why are you buying the property? They will tell you, buying to flip. Yeah. After that, after 2013 until now, I've not heard of any of my property buyers or even my friends saying that they want to buy to flip, because buying to flip, it's a speculation. It's not investment, but it's speculation. Yeah. So capital appreciation happens in a mid to long term game, 5 to 10 years and above. All right. It does need to have demand higher than supply, and also inflation has to happen. If inflation doesn't happen, then it's difficult also to have capital appreciation. All right. So we have covered 6 reasons of why motivation reasons of why people buy property. Okay, rental income. It's a very mixed subject. If you talk to people now, those people now will tell you, can now with the market like this, can get rental income, right? If you're buying a property, yes, if you are not staying and if you were to opt it out to rent, yes, definitely you will get a rental income or passive income, right? But how much are your expectation on your rental income? That is a question. We have to help customers or even our prospect buyers to understand. Those days, 10 years back, your rental can cover your installment. Now your rental income can't even cover your installment. Is it good or is it bad? To me, I don't see an issue, because why? If I'm buying a property and my rental income covers my interest, my interest paying to the bank from the rental, I'm fine with it. Because why? If I'm paying principal, I'm technically buying the property at its principal amount. If I'm buying at 1 million, my tenant are paying for the interest rate amount, I'm paying for the principal. In the next 20 to 30 years, I'm purchasing the property based on 1 million. And it's like I'm lending you money, or someone lends you money. Let's say someone lends you money 1 million, all right, and their interest rate is 4% per annum. So 4% is a good deal compared to credit card, which is about 12 to 18%. So, but your friend tells you, okay, guys, I'm lending you 1 million and you don't have to pay me any interest. You just serve your principal over the next 30 years. Is it a good deal? I will take it anytime, just with a snap of a finger. All right. So rental income, people still buy because of rental income. It's just a matter of how much loan are you taking. If you're buying it as cash, you get rental income. But if you're leveraging all the way to 90%, 100%, then of course whatever you have to, your mortgage or your repayment is higher, it's only fair, because why? Your repayment is slightly higher per each month, but you save a lot of cash flow from paying down payment. So I see a lot of people buying properties for rental income, and I hope the situation now, the COVID-19, I'm sure that your tenants are happy with you because you're able to help your tenant in some way. Yeah? Okay, let's move on to number 8. Okay, this number 8 is business element. Business element or / turn into commercial purpose. Yeah. So as we all know, few years back there was an influx of short-term rental, or people buying properties to let it out in a short-term basis. So what happened is, a lot of people buy few years back, or even lately, they are buying properties because they want to convert long-term lease, which is 1 year to 2 years, into a short-term daily basis, which they are using as like Airbnb or homestay. All right, this helps to earn more regular rental. Strategic home, let's say for example, some people even buy strategic home, like, you know, facing frontage, like in Bangsa, Jalan Telawi, Jalan Maruf. In SS2, you know, some of the houses, the landed properties there, they turn it into bridal house. Yeah, so they have done that because why? That is a motivation. They are buying that asset class because it has higher rental. So this is also part of turning a property from just a property stand alone into something else more exciting, something more unique, that you know, will definitely help to boost up the rental income. So yeah, so that is one of the reasons why people buy properties as well. They see the opportunity in turning a property from just a normal property, and then they put on some makeup, and then they rent it higher, so to get more rental income. All right, so number 9 is also also touches on commercial purpose. Okay, for example, number 9 says build equity for business or companies. If you have customers or you have friends or families who has a business, right? They've been running their business for a couple of years, but they have not actually done any acquiring on any assets. Say for example, they are renting office, they are renting their storeroom, factories or whatever not, and they have not bought any properties. Can be housing, can be commercial. All right, do encourage them, because part of the motivation of business owners, entrepreneurs who has businesses, they do buy properties or asset classes to build equity for their companies. Yeah, so it gives what happen is, when they buy over the long term, if let's say for example, when they want to apply loan from the banks, they have some assets that they can show to the banks that, hey, you know, I'm not just a business, we also have asset classes like properties, and you know, in that properties there will be, or there may be some equities that they are allowed to charge back to the bank, or let's say if it's fully paid off after some period of time, you know, they can charge back to the bank, and then they can get back some cash out for the properties that from the properties, that so that they can use this cash to roll back into their business. So I do know some of my friends and also clients who did charge some of their properties back to the bank in order to get some cash flow out for their business. Not to say that their business is not doing well, but they are using it to expand their businesses. Yeah, so that is number 9. Okay, so number 10, I think it applies to a lot of us. Education fund. Are you a parent? Have you bought a property because your main motivation was because of education fund? So what I mean by education fund, we all know education is expensive, and over the next 10 years, next 20 years, it's going to be more expensive. How does it work is, you buy a property now, you say you have a kid, age 1, age 2, right? When they have reached college time, it will be in another next 18 to 20 years down the road. So if you have bought a property now and you keep it for the next 15 to 20 years down the road, you will have some equity because your housing loan will go down over the long period of time, and your property prices will go up this way in the next 10 to 20 years down the road. Okay, with this equity amount, you can actually cash out or refinance it or sell it, because so that this money can actually fund back into your children's education fund. Another way of looking at it is, even as the property price, your loan goes down over the years, alright, if your property price remains stagnant, you still have equity here, which you still can use for education fund. Just to share with you guys, one of my friend, he young father, his name is EK. If EK is watching this, shout out to you. He has 3 daughters, and he had a property that he used to refinance a couple of times in order to cash out this property to actually fund back, to actually pay for education fund for the three daughters. So that is one very powerful vehicle that a lot of us can use, and a lot of times we need to also to educate our customers that these are the main motivations of why they are buying. We have to highlight back to them. Yeah. So my recommendation, it's 1 kid, 1 property. 1 kid, 1 property. If you have 3 kids, try your best, 3 properties. If you have 10 kids, 10 properties. Yeah, that is just a rule of thumb. But you're not supposed to force yourself into buying it, but it's just a rule of thumb. 1 property for 1 kid. Okay, don't buy cash, you can leverage, but if you have the cash, why not? Okay, so that is education fund. Number 11 is retirement fund. Who has bought properties here based on for the purpose of retirement fund? This one I can share with you on my experience. Alright, we are self-employed. We agents, we property negotiators, property consultants, we are self-employed. So with this, when I first started, one of my main reasons why I buy a property, a very strong reason, is because I don't pay EPF. Because we know most of the self-employed people do not pay EPF. So what's going to happen is, I buy a property now, alright, if I will maintain it for the next 15 to 20 years, or even 30 years. 30 years, I'll be 60 years old. Once this property is fully paid off, and if when I'm renting it out, I'm getting rental income from there, and this rental income will supplement my lifestyle when I'm in the golden age. Yeah, so it's either, it's just additional income, additional passive income. So do you see the rental income, plus also because of retirement fund, that will make this possible to act as my EPF. So if I'm paying EPF a couple of $100, those 10 years ago, I decided, why not I take this money, inclusive of additional some money, I do park it as a long-term game, a long-term investment, in order to get my retirement fund ready in the future. Yeah. Hi Sean, hi Alicia, welcome. Okay, so if those of you who has clients who is looking to buy for retirement fund, this COVID situation now does not really matters, because we are looking at the horizon of 5, 10, 15, 20 years down the road. Okay. Number 12, for savings. A lot of people, when they're young, their parents tell them buy property because why? They want to encourage forced savings. So you can force save in the bank. You can also force save as buying a property, and by paying your installment or whatever differences in your installment, you can treat that as forced save. So it's very good. It cultivates good habit. If you save money in the bank, not to say it's not good, but you have to be very disciplined. If you have an ATM card, whenever you need money, you just go to the bank, you key in your 6-digit number, and then you get cash out, and then you can do whatever you want, go travel or whatever not. But if you're doing it by buying property and forced saving, you have no choice, but this money will goes into your property installment, which you can hardly take it out unless you want to take it out by refinancing. Yeah, so that is number 12. I hardly see people doing this, number 12, but it's a good way for us to encourage people to force save. Okay, 13 is when you have 13 is called tax savings or tax deductible. If you have bought a property and if it's for rental, you're getting a rental income of just say 5,000 a month. Okay, you're renting your unit to your tenant. The tenant is giving you 5,000 a month. Let's say, for example, your interest rate, your installment is 5,000, and just say 80-20 rule. 1,000 is to your principal and 4,000 is to your interest to the bank. When you file your income tax, you will include 5,000 rental or 60,000 per annum rental income. Okay, but your 80% or whichever interest being charged on your loan repayment, this is tax deductible. Yeah, so it's also one of the way where people see tax advantages in property incomes or property investment. So that is also one of the reason why they buy property or they invest in property. Yeah, so that's tax savings. Number 14, we are almost there. Number 14 would be refinancing advantages. So this is very powerful. Refinancing is very powerful. It's how you want to leverage on your property. If you have extra equity in your property over the long term, you can refinance it to go holiday. You can refinance it to upgrade your house, to renovate your house. You can refinance it for your businesses. You can refinance it for your education fund. You can refinance it for so many reasons. Those who has properties now, who has bought your property 5-10 years ago, 15 years ago, 20 years ago, the market like this, we have heard some property guru says it's the best time to refinance the cash out and stand by the cash to reinvest in whatever that seems whatever asset classes or investments that you see that will help generate more income or more returns, especially at this time of period. So can you imagine if you don't have a property, or if your clients doesn't have a property, you don't have any ways to raise cash. But if you have a property now, you can actually refinance it and put it into a very good use. Yeah, so that is a very, very powerful method. Okay, one more thing is, if you have checked your bank loan, if your bank loan is still 6%, BLR plus 2%, it's a good time to refinance now because the interest rate is very, very low. Okay, we're almost there. Last but not least, let me end this. Last but not least is number 15. Number 15 is portfolio diversification. All right, what I mean by this portfolio diversification is, you have an investor, all right, or you have a businessman, or you have a smart investor. This smart investor doesn't just buy stocks, or if you have a forex investor, they don't just invest in forex. Some investors, they want to park their money in many places. Paper assets, for example, stocks market, you have the crypto market, you have the unit trust, you have businesses, you have venture capitalists or whatever, startups, and some people buy properties. So there's a lot of ways why they want to buy, or there's a lot of reasons why they want to diversify. So don't put all your eggs in one basket. If you are paper heavy, what I mean by paper heavy, in a sense that you heavily invested in stocks, maybe your customers can also consider building their their bricks and mortar asset class, okay, which is a safe haven. Or if you're heavily invested in properties, you may also want to invest in much liquidity paper asset classes such as stocks, or if you're high risk enough, you can try crypto. But I'm not saying you should try. Do a lot of research before you get into any investment. And so it's already 9 o'clock. I think I'm on time. Just want to share with you one more thing is, so there's a lot of motivations and advantages of buying a property. Yeah. So if you just think of, oh, I'm just buying it for investment, then I think your mind will just shut down now. But if you guys are buying a property and you really zoom down, or you help your customers actually zoom down to what are the main motivation of why they are buying a property, then it's definitely easier. That it's definitely it will not be time sensitive. It will not be, oh, should I buy now, should I buy tomorrow, that kind of thing. Buy when you can afford it, or buy when you can leverage. Because in property, the only thing that is against us is our age. As we grow older, or as we age to perfection, yeah, we are aging to perfection. Our age is against us, because the banks will not give us maximum tenure anymore. You will not be 35, you may be 25, you may be 15 years that you can only get loan. So your monthly repayment is very high, and when every month you're paying higher installment, it does makes property investment less attractive, unless you have a lot of cash. Yeah. Okay. So to sum up my property sharing with the motivation of why people buy property, it's buying a property is just the beginning, but if we learn to manage the property well, all right, we can turn a normal property into a much better investment. So don't just buy a property and say, okay, I'm done, I'm done, yeah, I've invested in property. Learn to manage it well. Learn to manage it. If it's time to renovate it. If it's time to paint it, repaint it. Because why? Property, it's fixed, but we are dealing with humans. Your tenants are humans. Your buyers are humans. There's emotions to it. Yeah. So with this, I end my session. Thank you so much for joining me, and I hope you guys learn a lot. I'll see you guys in the next future session. Bye.